I think I've probably drawn the short straw having to talk to you about superannuation. So first of all, you might see on your hard copy notes that it says 2017-18 superannuation certificates, but sorry, it should say 2016-17. So as most of you will be aware, there have been issues with processing of superannuation certificates again this year. So your 16-17 superannuation certificates were due to be submitted by the 28th of February 2018. The certificates weren't actually issued to be completed until January, which is about 2 months later than they've ever been issued before, which was ideal for us when we're in the middle of our tax return season, obviously, but we managed to get our clients' certificates finished and submitted by the 28th of February. And you should then have seen superannuation adjustments appearing on your March 2018 statements. Or not, as actually most of them were missing. The good news is some of them, well, most of them that we have seen were right, but actually lots of them were missing. So PCSE have given themselves a new deadline of the 30th of April. So if you haven't seen your partner's adjustments on your monthly statements yet, presumably they will appear in April or May once they've actually been processed. Which is not ideal in terms of tax relief. Now, we have checked previously with HMRC, because there have been issues before, that actually partners will not get tax relief for their pension contributions until they have physically been paid. So if they were due in March and through no fault of the GPs they weren't actually processed until April, that GP will have to wait a full 12 months for the tax relief on those contributions. What some practices have done is actually where partners had balances to pay, they've actually made separate backs payments for them to make sure that the payments went through before the 5th of April, so that their partners would get tax relief in the 17-18 tax years. So of course the problem with that is that PCSE will process the certificates and take the payments again, which will cause issues with the practice's cash flow. So if you are in that position, you need to get on to PCSE as soon as you see the adjustments being taken again and ask them to refund them. So perhaps in 6 months' time you might get the money back. So just be aware of the issue with your cash flow in the meantime. Now, for most of our clients, we do tax estimates, and for some of our clients where it looks like their profits have gone down, we've reduced payments on account, all on the assumption that their superannuation payments will go through on time. So what that means now is some of your partners will have been given tax estimates which are going to be wrong. We're just stuck with that. Overall, they should eventually be taxed on the same figures. Normally, it won't make a huge difference, but for some of them, it might push them into a higher tax band. So some of them might go from being a 40% taxpayer to a 45% taxpayer. Some of them might go from being under the 100,000 threshold to being over that, where their personal allowance starts to be withdrawn. So potentially, if any of your partners are in that position, we could look at claiming some compensation from PCSE. But we'll have to see further down the line how we actually get on with that. So that might be something to look at if your partners have been affected. But do be aware that any tax projections they've been given may now be wrong. Okay, contacting PCSE. I'm not really sure if I want to mention this or not. So what should you do if you're having issues? Unfortunately, we do not have a magic solution. We are stuck with the online system. Some people seem to manage to get through on the phone, but whether you can speak to the same person twice or not, I'm not sure. So the official line should be submit an online submission. There is a 40-day target response time for that. So as soon as you've done your submission, make sure you print it all off as evidence, keep a diary note, follow it up in 40 days' time. Follow it up with a complaint. There's a complaint drop down on the online submission. So I suggest you use that. Again, 40-day follow-up time. If you don't get anywhere at the end of 80 days and you are owed money, I suggest you contact NHS England. Your contract is with them. PCSE are just processing the figures. So you can go back to NHS England and demand the money. Potentially you could go down the small claims court route. If they don't, then refund you with any money you're due. Now, if any of you have partners who are BMA members, BMA have asked their members to report any issues to them, as they are trying to gain evidence in order to put some pressure on PCSE to sort get their house in order. So it might be worth you doing that. There are lots of bits on the BMA website about action they've taken and the responses they've received. So what BMA suggests you do, if you have a partner who needs to know what their pension position is and who is not clear with what's been submitted to NHS pensions, this will probably be particularly relevant for partners who are coming up to retirement. They can submit a subject access review request letter asking PCSE to confirm what they've reported on their behalf in terms of pensions. So there's a 40-day response time for that. As mentioned, you can apply to NHS England if they owe you money, and again the BMA have got a template for that on the website, which you can do, and again there's a 40-day response time for that. So hopefully that will get you somewhere, but at the moment I think it's just try and be patient, which I know is not ideal. I'm just going to finish it off with some partner pension issues. So there are a couple of big issues which might apply to some of your partners. Annual allowance I'll talk about in a second. Lifetime allowance applies when a partner comes to retire, and basically if their pension at retirement is more than around £43,500, they will get landed with a tax charge. So it's important that your GPs regularly look at what their pensions are likely to be, and they can do this by getting a total reward statement online, in theory. Some partners do seem to struggle to do this, so if they go on and they say your information is not available, they may need to contact NHS Pensions. But particularly for the partners coming up to retirement, they need to be keeping an eye on what the level of their pensions are, and if it looks like they're going to go over the lifetime allowance, they should go and see a financial advisor to discuss ways of trying to avoid the tax or reduce it. Now currently, if they do look at a total reward statement, that will only go up to 15-16, and that's because PCSE will not have forwarded the 16-17 details. So we are always running about two years in arrears. Annual allowance issues. Now this is something that most GPs don't understand, but unfortunately for some of your higher end GPs, they will need to understand this over the next 12 months or so, when some of them potentially get additional tax bills. They will suddenly become very interested in why they've breached their annual allowance. So we have had an annual allowance in place for several years. It was originally 50,000 and it's now 40,000. So the idea behind this was originally to effectively restrict private individuals from paying lots of money into a pension to avoid paying tax. That's fine in theory, but for people in the NHS pension scheme, the annual allowance is not judged on what they've paid into the scheme, which obviously we can easily see. It's judged on what their individual scheme has grown by during the year. And that has lots of complications within it in terms of how long they've been in the scheme, what their pensionable earnings have been to date, what their earnings were in the year, what the inflationary figure is for the year. So it's actually a very complicated calculation to work out what a person's pension growth is for any particular year. And we are reliant on NHS pensions doing that calculation. Now, they haven't got the partner's 16-17 superannuation certificates yet, but normally they would get those certificates sent in around April time. They would process them, and if they thought any GPs had gone over the annual allowance limit, they would issue them with a pension savings statement saying, you've gone over the annual allowance limit and this was your growth for the past 3 years as well. At that stage, we would normally want our clients to send us those statements and we could tell them if they had an extra tax charge. Now, generally, we haven't seen so far many GPs with tax charges, but that is potentially going to change. And there are 2 reasons for that. One is that for 2016-17 onwards, there is a reduced annual allowance figure for higher earners. So anyone with net income over £110,000 could potentially have their annual allowance limit reduced from 40,000 to down as low as 10,000. Okay? And this is not just their income from the practice, this is income from everywhere. So if they do out of hours cover, if they've got a let property, if they have some bank interest. So from their tax return, looking at what their net income is, if it's over 110,000, they may no longer have a 40,000 annual allowance. So in the past, if they've not gone over the annual allowance, it's much more likely they are going to go over that figure now. Secondly, for the calculation for 17-18, the inflation figure that NHS pensions will use is taken from a particular point in the year, and we know that that's going to be quite high for 17-18, which is going to mean the individual GP's growth is going to be higher when the calculation is done. So what does this mean for your individual GPs? Potentially, some of them are going to be more likely to go over the annual allowance limit. Some of them are going to be landed with some tax charges. There is a facility to ask NHS pensions to pay that tax charge. It effectively gets lent to the GP from their pension pot and they get charged interest until they retire. Now, the issue with that is that for the tapered annual allowance, NHS pensions will not pay any tax that arises because someone has an annual allowance of less than 40,000. They will only pay on the tax charge that arises above 40,000. So if a GP has pensions growth of 40,000 and they've only got an annual allowance of 10,000, they're going to have to pay a tax charge on £30,000, which if they're a 40% taxpayer is going to be £12,000. Plus a payment on account towards the next year, all of a sudden they've got a tax bill to pay of £18,000. Okay, so we are in a bit of a quandary really about what to do because we don't have the figures of what individual GP's pension growth is. So in the past we've suggested that they request pension savings statements to see where they are. However, we are expecting NHS pensions to issue pension savings statements for all GPs for 2016-17 because they don't know whether somebody's got a tapered annual allowance or not. They would normally be issued in May, but because they're going to have to do it for so many GPs, it's likely that that deadline will not be met. Normally, the scheme pays deadline is the end of July, but because partners won't have their statements until later, we are also expecting the scheme pays deadline to be extended. Confused? Okay, so what do you actually need to do? Although we have been telling our clients in their tax return letters, and we have been telling clients when we've met them with the annual accounts, who understands? Nobody. So you just need to gently warn them that they may have some tax bills. Gently warn them that if they get anything from NHS pensions, they must send it to us straight away. Do not put it in a drawer. Do not say, I never received that. Send it on to us straight away. Try and warn them that if they don't and the tax office catches up with them, not only will they have the tax charge to pay, they will potentially also be fined and also have interest to pay, and they will probably have missed the scheme pays deadline as well. Okay, so the other thing you can do, apart from warning the partners, recommend they go and see a financial advisor if they are worried, but also make sure that they inform NHS pensions if they move, or if they have moved and haven't told them, because obviously NHS pensions will be writing to them at their home address. They will not write to them at the surgery, so they need to make sure NHS pensions are up to date. Okay, I would ask if there are any questions, but I suspect that's probably all a bit confusing. Okay, that's it for this morning.